Hello, everyone. I'm Sayam Ibrahim, and today we're going to talk about how you can get into residential as well as commercial real estate. Whether you have experience or not, whether you have the cash or not, I'm going to show you guys real strategies you can go out and implement to buy your first investment property.
Welcome to the Rental Property Owner and Real Estate Investor Podcast, brought to you by the Rental Property Owners Association, where real estate investors have found success since 1968. I'm your host, Brian Hamrick from Hamrick Investment Group. This episode is sponsored by Green Property Management, managing everything from single-family homes to apartment complexes in the West Michigan area. Find out more at greenpropertymgt.com. And RCB and Associates, helping real estate investors and small business owners navigate the complex world of health insurance and Medicare benefits at rcbassociatesllc.com. Hello and welcome to episode 493. Real estate investing offers a powerful path to wealth creation, but many aspiring investors struggle to find the right guidance, resources, and strategies to get started successfully. My guest today, Sayam Ibrahim, has built an impressive track record with over 1,400 real estate transactions and more than $250 million in deals closed. With roots in both Dominican and Ethiopian communities, Sayam brings a unique perspective to investment strategies that work in diverse markets. Today, we'll discuss practical approaches for building wealth through real estate, regardless of your starting capital, navigating today's market conditions, and how his step-by-step system makes the complex world of real estate investing accessible and actionable for anyone looking to achieve financial freedom. Sayam, welcome to the show.
Thank you for having me on. I'm excited to be here, and I look forward to talking with you during this episode.
Tell us a little bit about yourself and how you got started investing in real estate.
I'm from New York City as a kid, grew up in the Lower East Side, wasn't from a family with a lot of money, but I did come from two immigrant parents that were very hardworking and very driven. My father's from Ethiopia and my mother's from the Dominican Republic. They came here with a drive and they started a family. So me and my two younger brothers, we grew up in a one-bedroom apartment in the Lower East Side where we slept in the bedroom, my parents slept in the living room. My father was a yellow cab driver for 21 years, and my mother was a hairstylist and a babysitter. And, they worked really, really, really hard to give their kids a better life. And, they were able to save up a little bit of money, and then they ended up moving us to New Jersey, where they bought their first home. My father started his first business, and they really, really embodied the American dream. They lived the American dream that, everyone talks about, right? And, I remember, when I was a kid, my father would make us read books and he would make us do math equations when other people wanted us to go outside and play basketball or ride the bike. And at the time, I hated him for it, but it absolutely paid off because, problem solving and being creative and just, reading comprehension just really, really helped out, where I was able to graduate from high school, got a scholarship to college, to Georgetown University, and eventually worked on corporate America on Wall Street. After being there for a little bit, I realized it's not what I wanted to do. So I quit Wall Street cold turkey and then embarked on in the real estate business. So my brother and I found a house in Newark, New Jersey. And, we didn't have any formula. We didn't know what we were doing. It was an ugly house surrounded by pretty houses, which was our entire underwriting for the deal. Right. And we said, let's buy it. Let's figure this out. I think this is a good deal. So we went and raised money. We got $2,000 here, $1,000 there, got a title loan on my brother's vehicle, and we bought the home for $45,000. We renovated it, and then we resold it and made a $60,000 profit. And that was the start of a long journey in real estate where, almost 15 years later, we've done over 1,400 real estate transactions for rentals, new construction, commercial, multifamily, wholesaling, the whole gamma, right? The BRRRR strategy, even hotels more recently. And we've had a long ride in real estate since then.
Talk about that first deal that you did with your brother. There was this transition from Wall Street to real estate. What caused that? Did you just burn out on Wall Street? Did you read Rich Dad, Poor Dad and say, you know what, real estate investing is where it's at? And how did you take that first step with the property in Newark?
A lot of people, they think that the path to, wealth and freedom is getting a great job, having a great paycheck, which I did. I was very comfortable financially working on Wall Street, right? But I was miserable with my life. I would start work at 5 a.m. and would get out 11 p.m. on average, and that was Monday, sometimes Saturday and Sunday even, right? When we had projects that were due. So on paper, I was very successful. I was making great money, six figures, but I was literally a slave to corporate America. And then an event happened. I'm now married, all right, with two beautiful daughters, to my high school sweetheart, believe it or not. And I wanted to get married, and I gave my boss a few months heads up notice. And he said, sure, no problem, no issue. Then when the wedding is about to happen, he said, do you think you can reschedule? We're really busy right now. Not sure we can afford you taking off. And so I took a step back and said, I'm working 80, 90, sometimes even 100 hours a week. I want to take 2 weeks off to get married and have a honeymoon. And you're telling me that you prefer me to reschedule. And so I literally quit cold turkey at that moment. I said, this is not how I want to spend the next 20, 30, 40 years of my life. I can remember where my boss had to cancel on their son's birthday parties because they had a client meeting, right, that they had to attend to and fly out. And I didn't want to live that way. So I said, I'd rather, work to live, not live to work. So I quit instantaneously and said, this is not what I want.
How scary was that to just make that leap, quit cold turkey or your six-figure job and then go into real estate? I mean, you must have had a lot of doubters when you bought that first property.
Of course. I mean, everyone, including my father. My father told me I was an idiot. My father said, "You're throwing your entire future away by quitting. People will die to take your space on Wall Street, right?" But I just knew this is not how I want to spend 20, 30, 40 years of my life. I realized that quality of life was equally as important as the money that you make. So, I kind of just put them on the back burner and I just churned forward. And I knew whatever I was going to do, I was going to be successful as long as I worked hard, was determined, and I followed a proven path. I ended up getting a mentor actually in the beginning of my real estate career that kind of guided me to success. So, but the first deal that we did, it was very scary. We didn't know how to calculate the after repair value. We didn't know how to estimate the repairs. And a lot of the work we did there, we did it ourselves, like demo and clean out and anything that wasn't very technical, like electrical or stuff, we did ourselves. So, and we had to do it 2 times, 3 times sometimes because it wasn't done right the first time. I'm not an electrician. I'm not a plumber. I'm not a contractor, but it was successful in the end. And it was the spark that we needed to open up a pathway that led to millions and millions of dollars in future revenue.
What did it lead to? I mean, what was the next acquisition that you made after that first property?
The first deal, huge success, and it was by luck. Second deal, not successful, right? I relied on what someone told me without verification or not knowing how to verify, if that makes sense. So a realtor told me I bought a house in Edison, New Jersey. A realtor told me I can sell it for $250. I sold it for $200. The realtor told me that it was going to be a $30,000 renovation. Guess what? It was an $80,000 renovation. And on your second property, you know how stressful that is when you're over budget by more than double and don't even know how to handle that. So it was a huge disaster. I actually lost a lot of money on my second property. And it put me into depression because I said, the first one went well. People are making money every day. Why can't I do this? Right? I should be making money, not taking money away from the household. And at this time, believe it or not, my wife was pregnant with our first kid. Right. And so, I had just quit my job cold turkey. I have no insurance. I'm supposed to be making money. All right. Instead, I'm taking money away. I went into like my shell when things don't go well. Sometimes people do that. And I luckily have a great support group. I have a great wife, which I always tell people having a spouse that's supportive of your dreams makes the massive difference as to whether you achieve them or not. And she came to me and said, look, if you really want to try this again, if you really believe that real estate's what you want to do, you should go out there and find someone that's doing it on a high level, latch onto them, and they will and walk their path. So you don't have to create your own path, follow a path that's already been successful. And that's exactly what I did. I went out and got a mentor and they taught me how to do all those things I said I did not do, calculating ARVs, estimating repairs, managing contractors, how to find deals off market, all that stuff that really, leads to a successful real estate business. And the rest is history. The following deal after that, we made over $300,000. We did a condo conversion after that. And we were able to learn how to raise money. And, it really took us to the roof.
Who did you find? Who was your mentor? How did you find them? Because that's what so many people need to really be successful is a good mentor who can show them the rope.
So I worked with a group that was a national coaching program, and the mentor was Stan Merrill was his name. And so, they taught me how to do fix and flips, how to analyze rental properties, how to wholesale real estate contracts, how to raise money. So it was an absolute successful program. And, I'm a product of their great teaching. And I look to instill the same type of teaching to other people beyond, after me.
So many people are doubtful of these coaching programs. And, there's so many people who think they're a scam, but it's great to see that you went through the program, Stan Merrill's program, and came out successful. And you're a testament to the teaching.
To your comment, there are bad programs out there. there are a lot of fake gurus out there that aren't actually doing the business. So if anyone wants to follow in someone's footsteps, my recommendation to them is to verify the guru, verify the mentor, make sure they're actually doing the business, ask them for copies of HUDs, ask them for proof that they're doing the business, all right? Because there's a lot of people, I know people personally that have done, 5 deals and they want to teach people how to be a real estate expert. When I'm like, when I was doing 5, 10, 15 deals, I was still learning, right? So, that I want to leave your audience with that little tidbit.
One of the things that you talk about is kind of the barriers in communities of color to like getting into real estate investing. Can you talk? I mean, being the product of 2 immigrant parents, and being in this field as long as you have, what are the barriers that you see, and what would you say to those communities of color that want to get ahead through real estate investing?
Unfortunately, many people of color aren't born with a trust fund. They aren't born with a lot of money in their savings, or handed down from their parents. Some are fortunate, but the majority aren't, right? And because of this, because of their upbringing, they're brought up with a mindset that real estate is for rich people, that real estate is for people with a lot of cash, that real estate is for people with a lot of credit, with the real estate is people with, that have experience, right? And I want to tell, my community, I want to tell people of Latin American, of African American, of all minorities out there, period, that you can do this, right? You just need to get your first deal, and your first deal will generate the revenue and experience to do your second deal, and then so on and so forth. And by simply just buying real estate, if you're busy because you work a job, just buy real estate and hold it, right? If you're busy, or you don't have time, or you're raising a family, just buy real estate and hold it. Not only will you get cash flow, the real estate will appreciate. You'll take advantages of all the tax benefits of owning real estate. And you'll see over 5, 10, 15 years that piece of property you owned outpaced any savings account that you could have had, right? And really boosted your chances of financial freedom for you and your family. So I want to give my community the confidence. I want to give my community the knowledge, the roadmap to follow, right, to get into real estate, so they can have the same opportunities that other people have in this country. And many of them don't believe that it's out there for them.
What kept you in the game? Was it your wife and her recommendation to you, or finding a mentor, or because there's got to be some intestinal fortitude to stay in a game where you just suffered a major loss?
Yeah, and that's why I went to a quote unquote depression, because I said, should I go back to work? Should I go back to getting a job? Is this really the right thing for me? Did I make a mistake? All right, am I hurting my family? All right, all these things were running through my head at that point in time. And having a supportive spouse, and said, look, your dreams are to be a real estate investor. Your dreams are to be an entrepreneur, right? I support you. And, of course, she was on maternity leave, but she had a stable job. So when you have a spouse that can have a stable job that allows you to take the chances to go out there and build your dream or build your business, that is a huge help. That's why I said earlier that having a supportive spouse that will support you in your mission will change your entire journey while getting into real estate or any business at that matter, because you don't fight opposition with every conversation, with every mistake, and it just leads to a peaceful household.
Talk about how that journey has changed, because I know Than Merrill's program is probably, I've never been through the program, but what I know about it is it's like fix flip, maybe the Burr method. But you seem to, based on what you said at the beginning, you seem to have done a lot more than just what that program teaches. So how did you evolve over this period of time?
I'm a big believer in education. So I listened to podcasts. I watched YouTube. I latched on to other people in the business. So when I wanted to do my first commercial real estate deal, it's what I hung around people doing commercial real estate deals and listened to their conversations, walk their properties, and understood, and watch YouTube videos on commercial real estate, and understood how to analyze a commercial deal, how they look at a commercial deal. So if you want to do something, I highly recommend that you surround yourself around people that are doing what you want to do. And guess what? You will eventually start doing those things as well. Just because you're in those conversations, you see those same deals that they're seeing, and you get that education. And so I actually ended up partnering on my first commercial deal with one of the people that I met that was doing commercial deals. And we did that first deal together, and it was hugely successful. And that was my first $1 million check that I ever received on a multifamily in Miami, Florida, that we bought, renovated, and then we ended up rented out, and then we ended up reselling it for a nice profit.
I'd like to take a moment to tell you about Green Property Management. Not only do they manage everything from single-family homes to apartment complexes in the West Michigan area, they also manage my entire portfolio. So I can tell you from personal experience that their unique flat fee management style is worth a closer look. If you feel that your property isn't operating to its fullest potential, then Green Property Management can help you take a holistic approach that will save you money, eliminate your headaches, and increase your net income. And if you're a property manager interested in applying Green Property Management's model, give them a call at 1-866-95-GREEN or visit them on the web at greenpropertymgt.com. If you're thinking of leaving your W-2 job and becoming a full-time real estate investor, one of the greatest costs you must consider is healthcare for you and your family. When I made this transition myself, I found the whole healthcare insurance process to be confusing and frustrating. That's why I'm glad I met Chad Creasy at RCB and Associates. Chad is a professional health insurance agent who helps real estate investors and small business owners understand and choose their best healthcare options. And best of all, his services are covered by the insurance company and won't cost you a dime. If you live in Michigan and are expecting a change in your healthcare insurance coverage for any reason, or losing employer coverage or transitioning into Medicare, then you owe it to yourself to contact Chad Creasy at rcbassociatesllc.com. Talk a little bit more about making that transition. I mean, you say hang out with people who've done commercial deals. Some people have no idea like how to even find those people who have done commercial deals, and to find those people will help get them to the next level. Like, were you pretty deliberate in seeking out those types of people?
Absolutely. So the typical transition for many investors is they start off with fix and flips because they want to build cash, or wholesaling for that matter, some type of, quick, in and out scenario, right? So they can start getting some nice bigger checks, building up cash reserves, and then they move on to rental business, the rental game, and which is exactly what I did. All right. For the first 10 years of my business, I didn't do any rental property. I just purely fix and flipping and wholesaling. And then they will move on to rental business. Now, after you do rental business, hey, I'd like to really scale things even further. I can buy more rentals, or I can scale up to commercial real estate. And so to do what you just said, I went on to various meetups. I went up to various, RIAs that were strictly focused on multifamily investing. So I would go to, Facebook and search multifamily events in my area. I live in Broward County, right? In Broward County or Miami-Dade. I would search RIA meetings that had meetings focused on multifamily analysis and investment. I would go to meetup.com and search, multifamily commercial real estate investing events happening, in my area. And I would just attend. Sometimes you had to pay $20 at the door, but I'd attend and I'd get 20 times more value than $20 I paid at the door to go out there and network with those people and just hear what they're talking about.
Did you find another mentor in the commercial world? Because it is very different from the fix and flips and the wholesaling, residential, commercial is a different game. So did you find a mentor, or did you just align yourself and like you say, partner with someone who was already doing it?
When I first started doing commercial, I did not get a separate mentor for commercial. I partnered, and I'm a big believer in partnering with people doing what you want to do and leveraging their experience to learn to get into what you want to do. So that's what I did. The first deal was a partnership. The second commercial deal was a partnership. And then we kept doing more beyond that. By partnering, I was able, I essentially was the person on the ground doing all the work, managing the contractors through their direction, right? Dealing with the banks, dealing with the draws as you do the renovation. And through that, it was a firsthand boot camp in commercial real estate with their direction and guidance, since they had already done it many times before.
What was that project? What was the first commercial deal?
It was a 16-unit apartment building in an area called Little Havana in Miami, which is one of my favorite neighborhoods in the Miami-Dade area, because there's a lot of old stock homes or old stock multifamilies that need renovating. All right. And you have the renovated, nice or brand new properties as your comps to base off of when you're done. So it's great. You got the old stuff and you got the new stuff in the same neighborhood. So it's an area that you can do phenomenally well. And it's close to very expensive neighborhoods like Coral Gables and Brickell that people will overflow to Little Havana if they're looking for something a little more affordable to live in.
You made that transition then in location from New Jersey. Are you still in Miami? And are you only investing in areas where you live, or have you spread out around the country?
I live in Fort Lauderdale, and I've been here now for 13 years, but I invest in various states. So I've actually invested in 14 different states in the country, but we do a big portion of our business in the Atlanta, Georgia area, as well as the Columbus, Ohio area and Cleveland, Ohio area. And the reason when we go there is because we're looking for yield, right? So, once you learn a strategy, once you learn how to do this, the entire world is your playground. Right. So these strategies of buying a distressed multifamily property or a distressed single family home, renovating it and reselling or renting it, right, can be done anywhere. Right. All you have to do is put the teams in place and put systems in place so you can do it successfully. So for us, everywhere we do business, we build a team there. We have a local maintenance person that works for us on staff. We have a project manager for the renovations, and then we typically have a leasing agent for turning units over as they go vacant, and we manage it all from Fort Lauderdale.
So, what's your sweet spot? Talk us through a typical deal, or maybe a recent deal that you've done. Step by step, kind of how do you go through it?
I love the Midwest. It's one of my favorite places to invest in because the price point for acquisition is amazing compared to what you can get in rent, right? Unlike in Miami, it's the opposite, right? The rents are low compared to the price you're going to pay for the property. So the Midwest, Cleveland, Ohio deal, a very typical deal is a home I buy in an area that is actually not, it's not a war zone. It's not the best part of town, but it's an average part of town, if that makes sense. I buy it for $80,000. I'll go ahead and put $20,000 in renovations to that property, and it's worth $150,000 after those $20,000 in renovations. So every deal that we do, we analyze it as a flip and we analyze it as a rental. And the reason why I do this is because I don't want to be pigeonholed into only one exit strategy. You'll be very successful in real estate if you can profit renting and if you can profit selling. Right. And another reason for that is because most banks require you to have equity if you want to refinance your capital out of the deal and use that capital for the next deal. Thus, the BRRRR strategy, right, was born. And so we are practitioners of the BRRRR strategy 100%. That's exactly what I did to build a rental portfolio of over 600 doors.
How is that BRRRR strategy working in commercial? And how are you funding these deals? Are you raising money from investors, borrowing money from banks? I mean, talk a little bit about the capital stack and how you keep rolling that and laddering up to more properties.
So in the beginning, we were simply bootstrapping our own money, right? And we would do a house, we'd renovate it, we'd refinance it. The perfect idea. We buy a house for $60,000. You put $10,000 in renovations. It appraises for $100. I refinance $75. I take all that money and move on to the next property. And I typically use hard money to do this so that I'm maximizing my return on the capital invested, and I can leverage more properties at the same time. More recently, the past couple of years, we raised money. So we put together a joint venture or a fund or a syndicate, whatever you want to call it, where we raised investor funds, and we do this on a bigger scale. And this allowed us to really scale to new levels. And raising capital is a lot easier than a lot of people think because there's so many avenues. You have family offices, you have networking events. If you simply start going out there and tell people what you're doing, people love being a part of great deals, and the money will flock your way. So I tell investors all the time, don't be afraid about the money. Find the great deal and the money will follow, right? And that's just how money works in real estate. So we do syndications, especially with the commercial stuff, some of the larger stuff. Like right now we're in a 72-unit apartment building, and we raised that through a syndication through a few different family offices. And we bought it for $9.2 million. It's in Little Havana again, right? A 72-unit apartment building that we purchased, bought it for $9.2 million. We put just under $3 million in renovations, and it should be a $20 to $21 million deal at the end, on the back end. And we're going to refinance that deal right now. As this week, we're getting all the final inspections for the renovations with the city, and we'll begin renting out the property.
You mentioned family offices because if you're syndicating and raising money from investors or groups, there's a big difference between kind of the individual investor and the family office. Talk about family office and how you were able to connect with them, because that is kind of they have more money and more ability to get things done. So having family offices that you can raise money from, that's a powerful tool. Talk a little bit about that, please.
So family offices are typically companies or offices that were set up because a family was successful in whatever venture they on, whether they owned a cable company or they owned a real estate investment business. They made a lot of money and they have cash. So they need to invest that cash to preserve the money and to keep that and prevent that money from deteriorating. So their whole business model is finding investments that'll allow them to have their money grow, at the very least fight inflation. right? And they're out there. So if you Google family office in any city in the country, I can almost guarantee you're going to find a few, if not multiple, that are in that area, especially in South Florida with all the wealthy people in South Florida where I live now. So, you just pick up the phone and start calling them. They'll ask for pitch packets, they'll ask for your pro formas. You'll probably get on a Zoom and might even meet them in person, and then they'll commit the capital to you. So it's much more simpler than it seems. But you need to have your ducks in line. You need your pro forma put together. You need your comps. You need your analysis. You need your pitch deck. So you have to come to them correct, because they have people coming to them all day, every day for money, and they're going to invest with the ones that are the best put together, if that makes sense, in their presentation.
What are some of your secrets of being the best put together? Because there, like you say, there is a lot of competition for family office money. What do they see in you and your team that makes them invest with you?
I think we give a very professional presentation. We have a template of our pitch packet that we put together for all of the deals that we do, and it's a very professional one. We have a full deal analyzer that we complete for all these deals that has the rental comps, the ARV comps, and it shows why we're buying it at a great deal. And you just need to make them feel safe. If they feel safe that their money is with you, their money will flow to you, right? And the way we show them that is that we buy deep, we buy cheap relative to value. I don't pay retail for property. So if you buy a property that's worth $1 and you pay 50 cents for that property or 60 cents for that property, money will flow your way because they understand that their money is safe. There's cushion, there's margin to protect their money. And that's what you have to show a family office.
Which then brings up the question, how do you find these properties that you're not paying retail for, that you're buying at a discount?
We buy some stuff on the market with realtors, so I'm not going to, discount realtors. We do that all the time. But the vast majority, over 95% of the deals that we do, are direct to owner through marketing. So we find situations that make sellers motivated, and we reach out to those sellers. So some of the most successful for us, the number one, source for finding off-market deals has been delinquent taxes. So we look at properties that are going to tax auction. We don't go to the auction, but we market to those people weeks, even months before the auction date. All right. And have an A/B conversation, or negotiate something that allows them to pay off their taxes, put money in their pocket, and move on to their next situation with life, right? With some cash, as opposed to being, having the property taken from them by someone that wins it at the auction. And this works for multifamily and single family properties. Another one that's been very successful is retiring landlords. We look at people who have owned real estate for 20 plus years, have not transferred the real estate, all right, and they live out of state. Guess what? If you own a property for 20, 30 years, chances are you paid much less than what I can pay you today. And it can still be a discount from market value. And you probably collected rent for years. So now your basis is very low. Your cost is very low. A great lead source to target. And the third one that we do that not a lot of people do is we target people that are delinquent on their water bills. And not just, $100 or $500, but thousands of dollars delinquent on their water bill. And you can get that by going to the recorder's office for any county and looking at recent utility liens filed. Right? When you think outside the box, you'll get the deals that other people are never even thinking about. If someone has a $5,000 water bill, right, this is what it tells me. It tells me, one, they're financially distressed. It tells me, two, chances are the water's off. And if the water's off, there's a high probability the property's vacant, which is another level of motivation to sell.
Tell our listeners how they can find out more about you, get in touch with you, and why they might want to get in touch with you.
We have a mentorship in a community where we teach people how to get into real estate investing, from fix and flips to wholesaling real estate contracts to doing the BRRRR method and building a rental portfolio with very little money out of pocket, how to raise finances and raise money for deals, how to analyze commercial deals, and even hotel investments, which we bought our first hotel a couple years back in the Caribbean, in the Dominican Republic. So for those that want to be a part of a community that's going to help you lift you up and help you get to your goals, you can follow me on IG, iam.Sayam. All right. And in the bio, I've links to all the different, things that we have, that the community, Wealth Wednesdays Real Estate Club, as well as our long-term mentorship. And also you can go to wealthwednesdaysrealestateclub.com. So I'll make sure to send it to you in an email after we get off this podcast so that you can put it in the comments for your listeners.
Tell our listeners, what is your favorite hack or app?
Favorite app is actually, it's a little more on the tax side, but when I found this app out, it's been phenomenal, and I save tons of money in taxes every year off it. So one called Mile IQ, right? If you haven't used it before, Mile IQ is kind of the Tinder for driving. So you can get more as a write-off on your taxes by writing off mileage than you will for gas. Or a lot of people save their gas receipts, but if you just track your mileage you do for business, and in real estate, we do a lot of driving, checking out properties, meeting with lenders, going to the banks, going to the title companies to close, or attorneys, whatever you're doing, going to Home Depot, right, or Lowe's. to get materials. All that driving is tax write-offable. You can actually get over 50 cents on the mile driven for business. And so Mile IQ, what it does is it tracks your starting and stopping, and you swipe one direction if it's a business drive and swipe another if it's a personal drive. And at the end of the year, you'll see you'll have 10, 20, even $30,000 of potential write-offs for your business by just tracking your mileage.
And it's called Mile IQ?
Mile IQ.
Sam, thanks for coming on the show today and breaking down so clearly like your transition from Wall Street to really, getting a mentor to learn kind of the ropes of fix and flip, BRRRR, wholesaling, and then transitioning into commercial real estate, where you seem to have had a lot of great success. And I appreciate you coming on the show and sharing it with us today. It's been a real pleasure.
It's my pleasure, man. Thank you for having me on. And I look forward to, talking to people from your community as they reach out.
I want to thank everybody for listening to this episode. I'm your host, Brian Hamrick from Hamrick Investment Group. And you can find out more about me by going to higinvestor.com. That's higinvestor.com. And you can also ask questions and join us on Facebook by going to RPOA, Rental Property Owner and Real Estate Investor Podcast. This episode was sponsored by Green Property Management, managing everything from single-family homes to apartment complexes in the West Michigan area. Find out more at greenpropertymgt.com. And RCB and Associates, helping real estate investors and small business owners navigate the complex world of health insurance and Medicare benefits at rcbassociatesllc.com.
You've been listening to the Rental Property Owner and Real Estate Investor Podcast, brought to you by the Rental Property Owner Association. You can find out more at rpoaonline.org. If you enjoyed this podcast, please go to iTunes to subscribe, rate, and review.